The views and opinions expressed in this podcast do not necessarily reflect the views or positions of Acuma, its board of directors, its management staff, or its members. The podcast discussion presented is conversational in nature and for general information only.
Hello and welcome to Acuma's On Point podcast, a series focused on sharing the stories of people who are making a positive impact in the credit union mortgage industry. I'm your host, Peter Benjamin. Today's episode is being brought to you by LoanCare. LoanCare understands the critical role member satisfaction plays in building long-lasting relationships. Their digital-first approach ensures a seamless, user-friendly mortgage servicing experience that's designed for mobile convenience, so your members have access to all their important information anywhere, anytime. And by leveraging sophisticated analytics and account-based marketing, LoanCare empowers you to deliver tailored financial guidance and relevant product offers to your members throughout the life of their loan. Whether navigating interim financing, servicing home equity products, reducing operational costs, or generating new revenue, LoanCare's award-winning digital tools support effortless portfolio management across diverse mortgage types, investors, and members. Choose LoanCare as your mortgage servicer or strategic partner and committed to combining personalized convenience, advanced technology, and member loyalty to propel your business success. Welcome back to the second episode of our MI miniseries. This is a quick reminder of our summer miniseries. Each episode will feature an intimate conversation with people who I consider to be champions of the credit union movement, with the goal of obtaining their open and honest perspectives on how we can move the credit union movement forward. Our next guest in the MI miniseries is Chris Perry, Vice President of Sales and National Credit Union Manager with MGIC. Chris, welcome. And how are you doing today?
Hey, Peter, I'm doing great today.
That's awesome. Hey, Chris, happy to have you here. You know, I couldn't be more thrilled to have you here. You know, you are DC local. You are someone who I feel has been extremely impactful in my career in the credit union space, and I'll share more about that and why I'm so excited to have you here. But before we get to that, as always, I gotta take a step back. I gotta pull Justin in to give us the latest and greatest happening over at Acuma. Hawk, what's going on with Acuma? Oh, and by the way, how are you doing?
I am good, Peter. How are you?
As always, living the dream.
I love it. So summer is officially underway, and I am so excited.
We're mid-stroke, man. We're mid-stroke.
Yeah, well, I'm just excited we're past this rainy season that we had in the spring here in DC. It was brutal, but so I'm excited for the sun, and I'm excited for all the things that we have going on. So here at Acuma, we have our Fast Tracks and Inside Track webinars going on year round, so you get to take advantage of always having some kind of educational content at your fingertips. And then next up for our in-person events, we're going to be heading to Las Vegas for our annual conference, which is going to be happening from September 29th to October 2nd. Registration's open. It's been open for a couple months now.
Yep.
And so we're excited. The agenda is, it's
awesome. Awesome. It's just awesome.
It's awesome. It's like us, right? We're awesome. The agenda's awesome.
A reflection of us.
It is a reflection of us. No, we have a lot of great speakers lined up for you to take advantage of. So definitely come out, see us. And I keep dropping little hints, and I'm wondering when Peter's going to slip up and tell us what his hidden tricks are that he keeps telling us about.
Never going to.
But you got to come and see him. So we hope to see you there. Head over to Acuma's website. Register.
Listen, it's Vegas. Just think Vegas, man. Just think Vegas.
You're like a card counter or something?
Maybe.
Ooh, that would be a good one too.
Who knows? Maybe like some street magician or something like that. Who knows? I don't really know.
You can't really dress up as a card counter because you're not supposed to look suspicious as a.
I don't know. Maybe I'll come out in like a gray suit and I'll just count cards or something like that.
Maybe we'll have a hypnotist.
That would be insane. Who knows? Who knows what I have planned?
Who knows?
Who knows?
So
Who knows?
definitely come out and see us, and you get to see what Peter has planned for us.
That's right. That's right. Justin, thank you very much.
Thank you.
All right, Chris. Again, as I kind of frame this up, the MI miniseries, was intended to kind of have conversations with people that I consider to be champions of the credit union movement, and as we can kind of continue this series, I feel like we continue to bring on guests that truly do care about credit unions and people that want to see credit unions be successful. And for me, I have personal experience with you because you are DC local, and I've shared this in the past, with our listeners, I'm DC area. I ran a mortgage division for a local DC credit union. You were instrumental in my success in the DC area. But, one of the reasons why, I like the idea of having my conversation with you is because I kind of view you as a connector, right? You take great pride in connecting credit unions with people across the country, right? It can be, a credit union in DC connecting with a credit union in California. It doesn't really matter. You are really good at that. But, I want to pull back. And I know that you're relatively new to the Acumen On Point podcast, but let me kind of explain a little bit more about the podcast. The podcast kind of started as a human interest piece, right? With the idea of let's share stories of people who kind of do great things for our industry, right? And it starts off with the fundamental question of tell us a little bit about yourself. So first things first. Tell us a little bit about yourself. Who is Chris Perry? So let's start with there.
Sure. Well, I was born in 1965.
I love that response. I love that response. Absolutely.
No, seriously. I have lived in Virginia since 87 when I graduated from college, joined the mortgage industry in 1991. Been around the block a few times, seen a few, phases of the business going up, going down. I started in MI 30 years ago and joined MGIC 24 years ago. And for the last 12 years, I've had the pleasure of, really focusing on the credit union channel nationally, which, the people say, what does national credit union manager mean? I basically I get to go to all the credit union mortgage-oriented conferences. So I've been going to Acumen since it was, for many, many years now, for about a dozen years. Pretty much every single Acumen gathering. But I also go to visit credit unions around the country that are mortgage-focused. And just have really enjoyed the experience being focused on the credit union channel. I still kind of keep one foot in the mortgage banking world with one of my other duties, which kind of, I think, gives me an interesting perspective of, how the two are similar, but how they are different in the same breath.
All right. So I think that's great, Chris. So and thank you for sharing that. So you hinted at it, and your experience and kind of being on the MI side and traveling around and connecting and being part of Acumen, for a very long time. But part of this is the transition from mortgage to MI. And I have a feeling of the answer, but I want you to kind of say it, and maybe it's the idea of your and maybe I'm putting my words in your mouth, but your passion and love for the MI side of our industry. Why do you love the MI side of our industry? Is it the simple idea of it gives you the opportunity to connect and help mortgage lenders and credit unions kind of think outside the box. Again, it's the idea of connecting a DC based credit union to a California one. What is it? What kind of keeps you going in this MI side of our industry?
Sure. I've been in it for 30 years, so I must like something about it.
I mean, you must. I mean, obviously, yes.
No, you hit the nail on the head. And matter of fact, you couldn't have given me a better, nudge towards it's really, kind of is founded in the way MGIC has always operated as a company. We take a very value-added approach to the business. So, of course, we have mortgage insurance, and of course, I sell mortgage insurance products. But predominantly, what I talk about with credit unions is just everything related mortgage-wise. So it could be marketing, it could be secondary, it could be training, it could be technology, it could be standing up a third-party origination channel or low to moderate income, and then what I try and do is help them with that. And so I like to say, if it's mortgage related and mortgage and credit union related, we either have a product, a service, a partner, or a referral. And I just really enjoy connecting people and helping people. And that's the way we try and earn business, as opposed to just saying, oh, I've got these products and I got great pricing. And as we all have very similar products and very similar pricing. So that's really why I have enjoyed my time as in mortgage insurance, and in particularly working with credit unions.
And it's interesting. So it's like, for me, DC area, I thought I had a strong network, right? Just being kind of DC local, right? And I had some mentors that kind of helped me along the way, being DC and kind of forming that DC area network, right? But when I kind of came over to the credit union space, from an IMB and the community bank, you were the one of the first people that I met, that I was introduced, through my local MGIC rep to you. And I honestly felt like, through your help, my network nationally for credit unions actually grew exponentially, right?
Thank you.
Now, I'm appreciative of that. I really am, and that's why I kind of called you like a connector earlier. And I think you take great pride in that. I mean, I do. And you jokingly said, like, it's like the Italian in you, right? Like it's like you want to break bread and you want to take people out to lunch and kind of share stories and treat them to a good meal and help them out as much as you possibly can. And I sense that, right? And I feel that, and I think it's a compliment to you, and I mean that.
Thank you.
Absolutely. So, all right. So next question, and this is really it. And it's, I think this is the important thing. This is why you were here, right? This is the meat and potatoes of today's episode. Again, you're a champion of the credit union movement, but why do you love the credit union movement?
That's an easy question to answer. So first of all, I really love the component of it's not only about money and profit. That it's easy to say it's all about the member, but in the long run, it is about members. I mean, members are the owners of the organization, and in most circumstances, they drive a lot of their activities and their approaches, and that just, it feels good to me. It feels comfortable to me. And, but when I have to admit, when I first started a dozen years ago, I was not a member of a credit union. I became a member of a credit union pretty much immediately. And then so I started moving my accounts to that credit union. And then I was visiting a small credit union up in Maryland one day, and I was talking with the mortgage guy, and he was telling me about this great 7-1 ARM he had at a crazy low price. And I was like, I'm going to refi with you. So I took out my first mortgage with Signal Financial, little credit union in Maryland. And they just did a great job. And I got to know the guy. And next thing you know, I did a car loan with him. And of course, I opened up a savings account and a money market. And then my wife wanted to buy a beach home where I'm actually at today. And so I took out another mortgage with him. Then I took out a second on the first to help pay for the second. So I live and breathe the credit union, and it all came from a mortgage, one mortgage. And, at one point, my two mortgages and all my loans, I think I was, about 1% of the assets of the of the credit union. So that's my story.
Right. So it started off with a positive experience, right? It started off with that relationship, right? So I think that's, you didn't directly say it, right? And I think you and I kind of share a similar mindset of it, right? The credit union movement is about that community, that membership, and credit unions. And I think that's the tough part. And I know I'm kind of jumping around, but it's a tough part about selling MI to credit unions, right? Because credit unions are going to do things differently. They're going to do things that are not necessarily, we'll say, within that box, right? They're going to, a member walks in that has a 55% DTI, in a 615 FICO score, but you know what? The refinance puts them in a better spot. They're just going to do it. Right.
Yes.
Right. And so, yeah, that's not an insurable loan, more than likely not. Right. But that's what credit unions do. That's the credit union movement, right? It's about the relationship. It's about the member, right? It puts them in a better spot. Right.
Yes. Yes.
And I think that's the power of the credit union movement.
Surprisingly so, though, credit union business performs significantly better than, it's along the same lines as traditional community banks, but they both perform significantly better than your average independent mortgage banker. So yes, they can be creative, and occasionally they'll do risky programs, sometimes without MI. That's a whole nother story we don't need to get into. But their performance is there. And there's a lot of reasons for that. But I just, I feel it's compelling that they can be there for members and solve equations because of their portfolio capacity that independent mortgage bankers can't, yet they still are able to, put together really strong performing portfolios.
Right. But it's about making the right decision for the right reasons, right? Yeah. Like, does this mortgage, does this refinance help someone be in a better spot? Right.
Yeah.
And if the answer is yes, the credit union movement kind of just does it, right? We're people helping people. Right.
Yeah. And I think that's what makes the credit union movement so special.
Right. That's exactly it.
That's the root of it all. Is they're not so focused on the bottom line as much as they are their member success.
Did I ever tell you this story, Chris? And if I did, I apologize. It was my first week at Lafayette, and I walked into, at that point in time, I was the head of mortgage. I walked into my boss and I reported directly to the CFO. I walked into his office and I was like, what's my magic number? What do I have to do? Like, where do I have to get to be considered a profitable line of business? He looked at me. He's like, what magic number? I'm like,
the number.
Like, what's my number? Like, what do I have to be? Like, give me a number. Yeah. He's like, oh, I don't care about that. I just don't care. I'm like, I left his office more confused than I walked in, because I was like, what?
The mortgage is all about hitting numbers, right?
So I worked for, I just left a community bank where I knew my magic number. I knew exactly what my profit, what the exact monthly fundings I had to get in order to be considered profitable. And now he's like, well, I don't care about that. Just do your best. I'm like,
That's
what?
funny.
I'm like, what? Just do your best.
I had a similar conversation in marketing because I was like, what's our goals? And they were like, goals. And I was like, yeah, like, how many mortgages do we need to help them get? Like all that kind of stuff. And the answer was however many they get. I was like, wait, what? Like, we don't have a goal? No. I was like, okay. So confused.
Just do your best.
Yeah. But no, I mean, and I think that's when like me personally, that's when I fell in love with it all. Just because I knew it wasn't so much like we were doing something for the greater good.
Well, part of merging two of the questions, one of the reasons why I really enjoy calling on credit unions is you'll find that, but you'll also find credit unions that are like, oh, we got a goal. I want to do $2 billion next year, and I want to put $1 billion on my portfolio, and they are very, very focused. So there's just such a wide variety of approaches that when you visit a credit union for the first time, you really can't project what type of organization you're going to be working with,
right.
And it just makes it interesting and fun.
Right. So. I feel like you're going to have, a strong opinion about this. I'm hoping you have a strong opinion about this next question. The next question really is, what can we be doing different, right? When, again, I frame this up, right? And I want you to be as open and honest as possible, because I feel like I talk about this a lot whenever I have an opportunity to talk about what we need to do to be better and competitive in our market. And I come from the mindset of, whenever I hear, we've always done it this way, that's just like grinds my gears. Right. So The next question is, what can credit unions do? I guess, what can credit unions do differently to compete in this modern market? Listen, you can respond with technology, you can respond with product. It doesn't really matter, but you can respond with both. But what do credit unions need to do? What do credit unions need to consider to really start ushering in a new era for the credit union movement?
Sure. And of course, I'm passionate about it because I'm pretty much passionate about almost everything I partake in. But sure. So I'm going to interpret the modern mortgage movement by really saying that we're in a purchase market, and we're gonna be for the next couple of years. There may be some little not refi booms, I'll call them refi pops, but for the most part, we're in an entirely different market than we were in for a dozen years, where refis would come and go, but we're always a strong percentage of the overall business. And they're not now. And so the cheese has been moved. But credit unions still have
good reference, by the way. That's a good reference.
Thank you. The credit unions still have their two, I call them pots of gold. They've got members who would prefer to do their mortgage with them and they have portfolio capabilities. Now, so I kind of look at it like it's really crucial right now for credit unions to be extremely focused on re-engineering their approach. And that can be marketing, sales, technology, but reorienting their approach very specifically for the purchase market. Refis will come in, but they'll go away pretty quickly, because the next refi opportunity is going to be the most targeted refi opportunity we've ever had. And i.e., every single loan officer that's done a purchase loan over the last 2 years has been tracking exactly what purchase they do, getting ready to refi them when rates come down. So it's going to be competitive like it's never been. And so, I think credit unions have to stand back and they have to say, all right, can I compete for those really high end, I call them 100 basis point loan officers? Now, do I have a management staff that allows me to spend the time identifying, recruiting, hiring, managing, and paying those loan officers? A lot of credit unions just don't. They won't, they're just not going to compete for that self-sourcing loan officer. So if you can't do that, how else do you earn purchase business? Because those loan officers earn like 65% of all purchases when they work for independent mortgage bankers. So whether it's through a system of member education, pre-qualification, pre-approval, referring to a friendly realtor, or it's using data to target your membership, using your portfolio to offer unique programs, or maybe some better pricing, say on an intermediate arm, or probably having developed a couple of different diverse strategies that can help you really compete in the purchase marketplace. And that's what's going to get a credit union through this this kind of lull in our business, if you will, that's probably going to persist, because it's driven a lot by the inventory issue, and that's not going to go away. Rates could come down, but there's still not a lot of homes for people to buy.
I agree. Product's gonna be key, right? I agree with that, right? I think a good loan officer, I'll take a step back. A good purchase-focused loan officer is going to be key as well, right? The tough part is that comp. That's going to be the tough part. I think there's going to be credit unions out there that can and are willing to pay 100 basis points. The problem is, this is the problem, is that a lot of times those 100 basis points, or even in this market right now where you have, we'll say 200, 150 basis point loan officers that jump down to I'm gonna call them prima donnas. Prima donna loan officers jumping down to 100 basis points. They're going to act like prima donnas when they go to the credit union, right?
Yes.
And I'm going to quote someone who we mutually respect, Dan Sugg. You cannot negotiate with terrorists, right? If they impact your culture, a prima donna impacts your culture, or has a potential impact your culture, you just can't allow that, right? So the tough part for credit unions is finding that 100 basis point. If a credit union is willing to go to 100 basis points, which I think credit unions can and probably should in a purchase market, if it's a purchase, especially if it's a self-source purchase.
Yes.
If you find a loan officer that fits into your culture and is willing to not be, and is not a prima donna, fits into your culture, not a prima donna, and is willing to self-source purchases, you just struck gold.
Yeah.
Right. But that's gonna be tough. That's gonna be tough for a credit union to find. Correct me if I'm wrong. Please do.
No. And as a matter of fact, that's why I kind of say, right, you first have to look to get over that. If you can't get over it, you still have plenty of other strategies like the education strategy, the referral to realtors, branch strategies, cross-selling strategies, data mining of your membership. There's really some significant advances in identifying, first-time home buyers in rental communities. There's a lot of different ways to do it. So I would say the good news is, if you just can't get to that 100 basis point loan officer, that's okay. There's other ways you can earn purchase business, but you have to be very deliberate about it. And I really enjoy helping credit unions kind of figure out, well, which of those works best for me and for them, and helping them understand how to put it together and deploy it.
Yeah, I like this conversation where it's going. So if it's okay, I'd like to continue on with it. So, the DC area, and I think there's a lot of areas like this that are very competitive, right?
Yeah.
In this area, and I've heard it, and a long time ago, we were at the Mark conference, and and for those that don't know, that's where the local the Mortgage Bankers Association of Metro Washington and it's the Maryland Mortgage Bankers and Brokers Association, right? I said that right.
In Virginia. Yeah, basically it's the MBA for Virginia, Maryland, and DC.
Right. So, and the Brokers Associations all combined and did one big conference. So anyways, I was at Lafayette. We went to the Mark conference, and we went to like I took a few loan officers with me, and we went to like a top producers session. And we were sitting in the back, and we were just listening, and one of the first questions was to, like, this, honestly, he was like a snot-nosed loan officer, probably 2 years in, and the moderator asked this snot-nosed loan officer, what are some of your keys to success? How do you kind of get your business? Like, how are you kind of building relationships, with your realtors? And this snot-nosed loan officer, I want to say he worked from some random IMB that I don't really care about anymore, said, well, I just tell them, don't send your business to credit unions because they're not going to get the job done, right? They're going to close loans in 60 days, and I'm going to get the job done in 20, right? So I share this story, right? And I shared the story in the past, and I'm open and honest about it. But that is common. That's a common occurrence. Loan officers with IMBs, non-bank lenders, are out there just destroying credit unions, right? Credit unions, or spreading false information, false rumors, false news about credit unions. So how do credit unions overcome that stigma in your mind in a purchase business? Because it's going to be important. That realtor relationship is key to our success.
Yeah. I think it is pretty much all the ways that I just mentioned, right? It's being very deliberate. In a refi market, you don't really have to be that when you've got this huge membership and a lot of them are looking to refi, they do kind of naturally gravitate. They come check out the website. They can fill out online applications. It's not near as purposeful as a purchase market, where you have to really go out of your way to connect with that person before they get to an agent, before they get to other loan officers, and employing a variety of techniques to do that. And so that's what I really think credit unions have to focus on right now, is how do I get to my member? And really, it's not just to do the mortgage for them. It's to really help them in one of the most important moments of and confusing moments of their life. First-time home buyer, or heck, even if you're a third-time home buyer, it's not easy to sell a home and buy a home. It's just lots and lots of variables. And now they got this, the NAR settlement. Are you supposed to, are you supposed to pay the buyer, agent now, or yeah? So,
or do you even go about it by yourself?
Yeah. And people say that's so easy with all this technology. And I just actually sold a home. So having been through it very recently, it's not easy. It's not easy to sell homes. It's not easy to buy homes. It's a complicated process with a lot of corners and angles. And so, to really look at it, it discourages me a little bit when I talk to credit unions have totally re-geared their focus for home equities. Of course, home equities help their members, but I think it does a little bit of an injustice to the membership not to, to take the wheel and develop these purchase money strategies that will keep you in the first mortgage business, because that's what it's going to be for the next several years.
I agree. I mean, if you think about fundamental banking, right? Cornerstone, any fundamental bank or financial institution has a cornerstone mortgage division, right? Because when time to get, when things like consumer and auto slow down or credit cards slow down, mortgage tends to pick up. When we think about the seasonality of things, and vice versa, when mortgage tends to have their slower season, auto and credit card tend to pick up, right? You almost need to have, from a seasonality standpoint, you need to have those things. Anyways, all right. So Chris, we got to kind of move forward for the sake of time. Last question before we transition to the second segment. And this is almost like, I'm asking for a sales pitch for you. Why do you love the Acuma community? You've been attending our events for quite some time. You're a regular. Why do you love the community? And if you were to, sit down with a credit union right now, why would you tell them it's so important for them to attend an Acuma event?
Another easy question. Whether you're a small or a large or a medium-sized credit union, whether you have a very successful mortgage operation or you're just building one, or heck, you even want to just have, originators and marketing and then use a QSO. There's so much to learn from attending an Acuma event. And it really derives from the credit union movement's willingness to collaborate, to share, to connect with each other and help each other and not really look at each other as competitors. Yeah, occasionally when credit unions are geo oriented, they might compete, but not really. Even in, some medium-sized towns where they feel like they're competing against each other, they're really not when you look at the market share distribution. Right. So I think Acuma really is the only large format opportunity for credit unions to do that. Now, they can go to an MBA function, but more independent mortgage bankers that generally attend MBA functions, their operations are completely different. Their motivations they have numbers. They have lots of numbers. And that's the only thing that drives their motivations are those numbers. And so I love Acuma because, well, number one, I think you've done a phenomenal job at kind of growing the organization that obviously Bob and Tracy did a fantastic job at building, but it provides a number of outlets through the year to connect with other credit unions. And frankly, through Acuma, there's not a single thing that you can't research and learn about regarding first mortgages from your brethren. Just all you have to do is attend or reach out and ask your question. And there'll be people there to help you.
Appreciate that, Chris. Really do. All right. So, Chris, it's time to transition. Again, appreciate you being here. But again, we got to transition to the second segment of our podcast. Again, this is where we do, sometimes we play Jeopardy, sometimes we do trivia. Sometimes we do a ranking. But today, we're going to do the crowd favorite, our listener favorite, the most requested segment, which is dad jokes. So I asked you, pre-podcast, I asked you to come prepared with 2 to 3 dad jokes. So here's what we're going to do. We're just going to go down the line. You're going to say your 2 dad jokes. Justin's going to do his 2 dad jokes. I'll do my 2 dad jokes, and then we'll just wrap up. Sound good?
All right.
All right. So, Chris, you are first. Go ahead with your 2 dad jokes. Whenever you're ready.
Okay. Let's hope I don't lay an egg. So I heard some music coming from my office the other day. I went to investigate, and it turns out it was my printer jamming.
I like that one. That one was really good.
All right. Well, this one's not quite as good, but when is a car not a car? When it turns into a parking lot.
Those are good.
That's good. That's good.
See,
that's good, Chris.
Now
good.
I got my work cut out for me.
All right, Chris.
Yeah,
that's good.
high bar there, baby.
That's good.
Yeah.
All right.
All right. What do you call a bee that returns from the dead?
Wait, what?
What do you call a bee that returns from the dead?
The dead.
A zombie.
I hate that I didn't know that. Oh
I was
my
surprised
God.
you didn't. I was like, this one's gonna be too easy. It's like a teed up.
Oh my God, I hate that I didn't know that. Oh, okay. Okay, what's your next one?
How many apples grow on an apple tree?
How many?
All of them.
Good one.
Peter doesn't like my all of them and the right foot and left foot jokes.
You do them all the time.
But they're so great. And you never get them.
It's like one of his jokes was like,
what do you
what's not your foot? My foot.
My foot.
What? All right. So it's been a while since we've done some traditional trivia. So rather than dad jokes, I thought I'd share a little trivia with you. All right. So did you know that humans eat more bananas than monkeys? It's true. So when was the last time you saw someone eat a monkey? No? Okay.
Never.
No? Okay. That one felt flat.
But
all right. Here's a good life hack. If you're ever feeling cold, just go sit in the corner. It's always 90 degrees.
Very true.
That. That's a very square joke.
It is. All right. Well, I'll just do one more just because the first one fell flat. My wife wants to start a garden. But you can't plant flowers if you haven't bought any.
There you go.
I like that.
All right, good. Thank you for redeeming myself. All right. So, well, Chris, that wraps up dad jokes for this episode. Thank you very much for joining us. Really do appreciate your time today. Again, always enjoy talking to you. And again, thank you very much for being such an amazing champion for the credit union movement.
Absolutely.
Again, means a lot to all of us and to the Acumen community. Again, thank you very much.
Well, thank you. I appreciate being a part of the community and looking forward to, I'm looking forward to seeing everybody in Las Vegas.
Absolutely. Oh, absolutely. Absolutely.
Oh, yeah.
All right. And Justin, thank you very much.
Of course. My pleasure.
Sure. And thank you again to Loan Care for sponsoring today's episode. And to all of you, we know your time is valuable. Thank you again for tuning in to the latest episode of Acumen's On Point podcast. We hope you enjoyed it. Until next time, be well, my friends.
Thanks for listening. We'll see you next time at the Acumen On Point podcast. If not already, be sure to subscribe and give us a 5-star rating. For more great episodes and information, be sure to visit us online at acumen.org. And to get the latest updates, head over to our LinkedIn page.